Hi, this is Sean Overton with OneStepRemove.com, and this video will discuss common mistakes in communicating a trading strategy. Usually this comes up when you're trying to get something programmed for MetaTrader, NinjaTrader, TradeStation, or you're just trying to explain a new idea to a friend and they're really not getting it. I'm going to go through the double seven strategy. It's a video I posted previously on YouTube that explains a very simple but well-founded trading strategy. We're going to go through how to explain it poorly, how to explain it well, and some tips and suggestions at the end, what you can do if you find yourself stuck and you're not sure how to get the point across. I'm going to start out by explaining it poorly. The typical scenario that I see is that somebody says, okay, I load up my chart and I put a moving average on there and I look at the chart and I see which way the market's going. So let's say that the market's going up and I see that it's been going up for a while, but then it starts to correct and I see a big dip. And when it's dipping, I want to see that it's settled down and I want to buy on that dip, and then hopefully the market will start trending again. That's good in the sense that I got the general picture, but very bad because there's no detail. There are two main questions that hanging out there. One is what is an uptrend, and the second question is what's a dip. When you're communicating a trading strategy and you want it to be mechanical or even programmed, it has to be in terms of hard numbers where there's zero discretion. And the way you do that is you put numbers on your facts. That means you have to decide what an uptrend is in terms of numbers, and you have to decide what a dip is in terms of numbers. So let's go over to the good way to communicate it, where you can see quickly and clearly how it looks. Here we have the forum where I've posted the double seven strategy in writing. You can see that it has simply two rules. Close when the close is above the 200 moving average, and when the lowest close in the past 7 bars occurred on the last bar. Based on the last description, you'll probably recognize that the close greater than the 200 moving average represents an uptrend. And you'll notice that on the second part, that's the definition of a dip. The lowest close in the past 7 bars occurred on the last bar. That can be tricky to come up with. If you've never communicated in terms of hard numbers or done any programming or had to think logically step by step in almost checklist mode, that's going to be a little daunting, and that's where you might find yourself having questions and you're not really sure where to go, and that's why we're here. So if you have a strategy idea and you want to get it coded but you're not sure how to get the point across, then that's when you should contact us and say, here's the idea that I'm thinking of. What we often do is we tell clients to gather a series of screenshots that represent their ideal trade setups. We'll look for the pattern for you and say, this is what it seems to have in common. Try applying this to your strategy or to your trading and see if that really seems to match up with the trades you're taking. If it does, then that's something that you would want to get programmed, and if not, that gives us a very solid foundation for tweaking the rules and getting it to the point where it's ready to program and for the machine to go through it and think through it logically. If you have any questions on this, you can find us on the website at www.onestepremove.com, or you can always give us a call at 866-212-1544. Again, this is Sean Overton with OneStepRemove.com. Thank you for listening.